cosmetics company e.l.f. Beauty has won over makeup lovers from all over with its low prices, great dupes, and viral marketing.
Are we even surprised at this point? e.l.f. is always killing it.
This product is so good and it is so affordable.
e.l.f. just dropped all of these new dupes. We have to try them out.
It's cool. It's hot. It doesn't matter if it's cheap or if it's a dupe. They've kind of transcended that.
e.l.f. is now challenging legacy players like Estee Lauder. And in May 2025, it announced it was acquiring Hailey Bieber skincare brand Rhode in a $1 billion deal.
Rhode was founded in 2022. $1 billion and founded 3 years ago.
Shares popped more than 25% the next day.
I thought the reason why things were so great was because the numbers were great. It's this acquisition that you made, which everybody seemed to know as being the right thing at the right time.
e.l.f. stock has been volatile over the past 3 years. But the company posted its first billion-dollar year in May 2024 after sales spiked 77%.
Last 3 years, our stock is up over 200%. So we continue to be able to prove people wrong. And part of that has to do with our ability to execute and the strong growth that we drive. And we have incredible white space ahead of us.
It really is in a league of its own. And we do view e.l.f. as a best-in-class executor.
And while the company reported its 26th straight quarter of net sales growth in its Q1 2026 earnings on August 6, 2025, it faces some challenges ahead. A weary Wall Street that believes the company could be peaking. Its stock fell more than 10% on August 7th. Its heavy reliance on China caused profits to drop 30% in that first quarter. And it has a heavy debt load from its Rhode deal.
That's the reason for the swing, right? Is I think they could feel a bit of the slip. They'd gotten there and have done a really nice job, and then it felt these headwinds. And if you were to ask me, are they going to be bigger or smaller in 5 years? I would guess bigger.
So how did it get here? And will its $1 billion bet on a mere 3-year-old viral celebrity makeup brand pay off? e.l.f., which stands for Eyes, Lips, Face, was founded in 2004 in Oakland, California. It initially sold just 13 affordable quality makeup products online. Within 3 years, the company grew into a multi-million-dollar company, developing dozens more products, and partnering with retailers like Target. It opened its own stores in 2013. CEO Tarang Amin, who joined the company in 2014, brought a wealth of experience working with consumer product companies like Procter & Gamble. He wanted e.l.f. to become even more accessible.
We want to be wherever our consumers are shopping for beauty. e.l.f. is a very elastic brand. Same quarter, we launched into Dollar General. We launched into Sephora, Mexico.
Also in 2014, e.l.f. expanded its reach by selling internationally in the UK and Canada. It went public in September 2016, raising $141 million.
The two most important things that have fueled e.l.f.'s strategy is marketing and its ability to offer dupes of some very popular prestige products at bargain prices. Shoppers actually asked e.l.f., please create a dupe of the drunk elephant. They're not actually comparing the products themselves. They won't say that publicly, but the consumer does that for them.
Selling dupes, or cheaper yet premium versions of popular makeup products, has been a part of e.l.f.'s business model since the beginning. But it has especially benefited with the acceleration of dupe culture over the past few years. Americans are picking knockoffs as they prioritize price and value, especially Gen Alpha, Gen Z, and millennial consumers who have made e.l.f. their most purchased cosmetic brand, according to the company.
We don't make dupes. What we take inspiration from what our community wants and the best products in prestige. We always put an e.l.f. twist on it, so it's different and at a much better value. So the real innovation here is how you get that prestige quality at the incredible values we're able to.
e.l.f.'s digital presence dates back to its early roots as an online-only retailer. Its advertising strategies have helped it win over consumers from a variety of demographics. It advertises on online gaming platform Roblox, was an early adopter of TikTok, and had a Super Bowl halftime commercial with Jennifer Coolidge in 2023.
Oh my goodness, I look like a baby dolphin.
All the user-generated content of people sharing side by side of the Dior lip oil and the e.l.f. lip oil. This is free marketing for them constantly.
Honestly, they look basically identical.
The company adapts and creates new products based on customer feedback, which it closely monitors on social media.
they're paying attention to what shoppers are asking for. They could post an ad about this new product and people be like, I tried it, it was too sticky, or the lip oil is drying, and the company will actually go back and make the lip oil more hydrating. So keeping that really close pulse on the consumer is what e.l.f. has said has made it so successful.
The company has also been quick to course correct. For example, in 2019, the company was fined $1 million for inadvertently importing materials from sanctioned North Korea. The next month, Amin closed all 22 of e.l.f.'s stores, saying it was to focus more on growing the company's presence in national retailers and digital channels. And in May of that year, the first Trump administration increased tariffs on Chinese goods from 10% to 25%. At the time, e.l.f. sourced 100% of its products there, so the company started shifting production away from China.
The way we went from 100% production in China to 75% has less to do with tariffs and more to do with having a well-diversified supply chain. Our preferred approach is we tend to find like-minded suppliers where our quality people and their facilities, our lean manufacturing techniques are there, so we can replicate the exact same model in other geographies.
While these events put some pressure on the stock, the company had an overall strong year. Beauty was a fast-growing segment and meant high turnover in terms of inventory, benefiting e.l.f. Its stock grew more than 261% between January 2019 and January 2022.
Wall Street started taking e.l.f. more seriously coming out of the pandemic when beauty was surging, actually, especially in mass beauty where e.l.f. was disrupting the cosmetics space. It was really post-COVID where we did see the greatest benefits for e.l.f.
Its share price nearly quadrupled from 2023 to hit a peak in March 2024. Though it has since nearly halved. In that time, it acquired Canadian skincare company Naturium for $355 million and started selling its products in Dollar General stores. But after several quarters of outsized growth that began in 2023, investors grew concerned as sales slowed. The threat of tariffs was another major concern. e.l.f.'s share price declined almost 70% between July 2024 and April 2025.
We're not worried about any short-term stock reaction. I've been CEO 11 and a half years. We've seen our stock go from $8 to $220 and everything in between. For us, it's about the long term. And we feel that this consistency of our delivery, in the end of the day, is the most important thing, and people always come around.
They were stuck in the mud for a year after being a rocket ship for so long. So they were looking around and saying, okay, what do we do to shake free again and to get moving? There's a world where you got to just keep kind of innovating.
e.l.f. has been an outperformer in the beauty industry, while legacy players such as Estee Lauder and L'Oreal have reported weaker sales since June 2022. The e.l.f. brand was the #1 color cosmetics brand by units sold and #2 by dollar share in 2024.
We do think that over time, they will eventually be the #1 mass cosmetics company globally.
In e.l.f.'s full fiscal year 2025 earnings, released in May, the company grew net sales by 28% to $1.3 billion. Its international sales also grew 28%, driven by expanding into new markets like Germany, Belgium, and Poland. In its fiscal Q1 2026 earnings, e.l.f. reported higher net sales growth, though net income declined substantially.
Certainly tariffs are a factor right now, and we take a long-term view and have real responsibility for ensuring proper consumer value. And so that impacted, obviously, the gross margin line, but overall, we had very strong results, including 12% adjusted EBITDA growth, even in the face of tariffs.
e.l.f. has stolen the spotlight because the shares are up 25% after they spent $1 billion to acquire Hailey Bieber's company. It's called Rhode.
The Rhode deal, announced the same day as earnings, surprised some experts.
We kind of, from the M&A advisory world, assumed, hey, they have to be heads down and focused on the supply chain, the stock. I cannot imagine they're going to take a big swing.
We've been tracking Rhode for a long time. We're always attracted to other disruptors, and what Hailey Bieber and her team have done is nothing short of remarkable.
With just 10 products, Hailey Bieber's direct-to-consumer brand grew to $212 million in net sales in a mere 3 years. It has more than doubled its customer base over fiscal year 2025 and became the #1 skincare brand in earned media value, which is an estimate on the performance of a company's non-paid advertising, like social media mentions, reviews, or media coverage.
It's a very impressive ramp, being about 3 years old at this point. We're more excited about e.l.f.'s ability to help Rhode expand distribution beyond that Sephora agreement, both domestically and internationally.
E.l.f. was already on the map. We launched in Sephora with the E.l.f. brand last year in Mexico. It was one of the best launches they'd ever seen. We loved what we saw. And so certainly this broadens our partnership with Sephora by going into all US and Canadian doors.
The acquisition is E.l.f.'s biggest ever. It financed the deal with $600 million of debt.
It was either get that debt or you're not going to get this deal. I think there's a very good chance that this turns out to be pretty heavily accretive. Through that lens, I like them getting scrappy and figuring it out.
There's a lot of what ifs. You look at Selena Gomez, you look at Kylie Jenner, some of the beauty brands that they have, really strong performers. How long does that last? But there's certainly questions that Wall Street's going to be asking as this company continues to grow.
E.l.f. is exposed to tariffs given its heavy reliance on China. Today, 75% of its products are sourced there. If unchanged, E.l.f. expects its cost of goods sold to increase by at least $50 million annually. And the new tariffs cause net income and profits to each fall 30%. However, the company is working on lowering its dependence on China even more, exploring options in Thailand and parts of Europe. But that'll take time. Rhode sources primarily from Europe and South Korea. E.l.f. raised prices by $1 on August 1st, but said the adjustment won't mitigate any impacts until its second quarter. It's the second time the company has raised prices since 2022.
75% of our products are still going to be $10 or under. We're doing more supply chain optimization and business diversification. 2/3 of Americans live paycheck to paycheck. We actually think it's immoral to charge them so much money for products that we clearly can make for a fraction of that price.
E.l.f. is one of the most exposed consumer companies when it comes to China tariffs. Now it's $2 in the last 5 years or so. Is that going to be the thing that tips the consumer over? If you have a good enough product that is that well performing and that much cheaper than the prestige equivalent, then my gut tells me consumers are still going to shop and buy it. But a lot of that comes down to whether or not the product's worth it. So far, consumers have said that E.l.f.'s products are worth it.